Hey everyone, welcome to the Final Bar. This is Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Happy holidays here at the end of 2022. We wanted to share with you a special series for the Final Bar called the Top 5 Charts of 2022. So far this week, we've hit on the S&P 500, talking about the big picture structure in the equity markets, focusing on Fibonacci retracements, but other measures of supply and demand, of trend and momentum. On day 2, we talked about interest rates. We talked about the bond markets, how that relates to stocks, 10-year interest rate, the $ sign TNX, and how the 10-year treasury yield told us a lot about leadership themes, particularly value versus growth. On day 3, we went into the US dollar, commodities as well. We talked about the dollar, crude oil, gold, how they're related to US versus non-US markets, how those relationships are often actually quite fluid, and what that should mean for you and in your investment portfolio. Today on day 4, we are going to go to an individual stock, the only individual name we'll probably talk about here in the top 5 charts. This is the chart of Alphabet, ticker GOOG. It's a name you're probably familiar with, right? It's one of the largest names listed here in the US. But I found that in 2022, when I think about what I learned, when I think about the stories of this year, the rotation in growth from a clear uptrend phase in 2021 to a clear downtrend phase in 2022 was striking. Right at the end of 2021, I remember looking at these markets. Google actually made a new high in November, made a lower peak in December, briefly, just barely made a new all-time high in January, but not by much. And here on the chart, you can see these, right? The peak in November, lower peak in December. We were sort of moving lower, broke below its 200-day moving average for the first time in a couple of years, right out of the new year in January. But overall, you can see the transition from uptrend phase to downtrend phase. So we'll dig into the chart of Alphabet today and talk about that relationship, that rotation. So here is the chart we're going to be reviewing. In the top, it's my daily, classic kind of daily 2-year chart. If you watch the Final Bar regularly, you see this chart featured a lot because when I bring up a name, right, when I bring up a stock and I just want to see what's going on, this is my go-to chart. And it's a 2-year daily bar chart. I have the 50-day moving average in blue, the 200-day moving average in red. We have the RSI, the relative strength index, my favorite measure of momentum, right below the price. Then at the bottom, we have the relative strength, which is important. This is looking at Alphabet versus the S&P 500. So GOOG, SPY, and the indicator we use for that is actually called price-performance. It's a great way to just create a simple ratio, look at the relationship from one thing to another thing, in this case, a stock versus a benchmark. Let's start at the top, and we'll talk about the price behavior of Alphabet and why I think it was such a telling chart when you look back at 2022. So think about what the world was like in maybe September of 2021. Charts like Alphabet are making new all-time highs, above 2 upward sloping moving averages. The momentum characteristics are strong. The relative strength is improving. This is sort of the FANG, the golden age of FANG investing. Maybe there will be another one, but for now, looking back, that appears to be the golden age of the FANG trade, right? You buy any of those names, you sit on it, you're performing well, and all these other parts of the market, small cap stocks, value stocks, non-US stocks, struggling to keep up with the strength in the mega cap US space. And those are dominated, those mega cap FANG names are in 3 key sectors: technology like Microsoft and Apple, consumer discretionary like Amazon and Netflix, like Amazon, and then communication services like Netflix and Alphabet, ticker GOOG. Now, think about what the market was like then, right? We're in a clear uptrend phase. Now, fast forward a little bit to the end of the year. A number of interesting things happened here, right? If you look at the chart of Alphabet, made a new high in November, made lower highs in December. Also look at how the price went higher September through November, and look at how the momentum actually sloped downwards. Let me bring up, just draw a quick line on here to show that relationship. What I'm talking about is this right here, right? Prices going higher September through November, momentum actually going lower September through November. So here we have, it's called a bearish momentum divergence, where the price is going higher, but the momentum is sloping downwards. Ideally overbought on the first attempt, not overbought on the second attempt. That oftentimes indicates trend exhaustion, indicates when a trend has had its run, when it's gone too far, and on that last move higher, the momentum has dissipated. There's less upward thrust behind the market swings, and it's suggesting that the uptrend phase is most likely in its latter stages. Now, you had a bit of a head fake here in February, so you fast forward a little bit. you can see that Google actually did gap higher. That ended up being the last sort of new high for GOOG. It really was a retest of the November high more than anything. And from there, we sort of began this downward phase. So a couple phases on this chart, right? Fall of 2021, sort of all as well. Alphabet is part of this FANG trade that is working. I would say in the fourth quarter, that started to change a little bit. And here it was sort of a big question mark, right? And I remember going into 2022, this was the Fed talking about raising rates. We covered that in our second of this series of top 5 charts of 2022. This is when, some things actually made a new high in January, for example, the S&P 500, but small caps, the XLK, a lot of other parts of the market made lower highs going into the new year. So you started to get these signs of a potential change in direction. But overall, things were still okay. And you can see that Alphabet was keeping pace with the broader market by the fact that the relative strength of Alphabet versus the S&P was actually going sideways. Then things really started to change. Look at how instead of making higher lows, we're making lower lows. Instead of being above the 50-day moving average, we've now broken above it. We then in the first quarter tested the 200-day moving average. Look at how much we chopped around, then eventually broke down. Finally, here in April, Alphabet probably made the most glaring confirmation of a bearish phase, which was support in January, support in February, support in March, support in April, now broken. You've tested sort of this level around 122 to 125 a number of times. We then broke below it. And this is the area that I'm kind of talking about right here. So look at this sort of general, space. So we first tested that level from above here in January. This is after we'd broken the 200-day, broken the 50-day. And the question was like, is that the bottom, right? And all of a sudden you get these double bottom type of things. Then we retest it again, retest it again, retest it again. We finally break below it. At that point, it certainly seems like the evidence is net bearish because now we have a stock failing to hold support. We have a stock below 2 downward sloping moving averages, which is what we were looking like at the end of April. The relative strength, instead of being in an uptrend or being in a sideways trend, was now very much in a downtrend, right? Kind of heading down and to the right. I also want to highlight this particular area here, and let me just clean up a bit. So we're going to look at the general range of the RSI. In a bullish phase, the entire range tends to be above 40. So this is what a bullish phase looks like for RSI. In a bull phase, like you saw in the left part of the chart, 2021 really into September, when the market rallies, you often become overbought, right? Because there's so much buying momentum, you're pushing momentum to the upside. On pullbacks, the RSI rarely gets below 40, right? You're sort of buying on the dips and we're rotating to the upside. Now, look at what happened on this side of the chart, which is really where we're at arguably today. We're going to color this very appropriately, kind of a muted red kind of color. Now we can see that instead of holding at 40, the RSI tends to get below 40 when the market sells off. Instead of getting to the overbought region, you can see the RSI tends to stall out right around 60. Look at that. Through most of the last year and a half, the RSI has rarely, if ever, gotten above 60 and really stayed there, right? Briefly, but then comes right back down. This idea of the RSI moving in ranges, right, was really popularized by 2 people. Connie Brown, in her book, I think it's Technical Analysis of the Trading Professional. And I have links for recommended reading, by the way, at marketmisbehavior.com/reading list. Or if you go to marketmisbehavior.com, click on reading list on the top. I forget the URL, but you'll see that book along with others that I would recommend. But Connie Brown's book was the first time I was introduced to that concept of the RSI fluctuating. Andy Cardwell, who sadly passed away earlier in 2022, made a career out of talking about RSI. And one of those things he talked about was that range adjustment sort of strategy. So basically, in a bullish phase, the entire range tends to move higher. In a bearish phase, the entire range tends to move lower. So by looking at the RSI and what range it's in, you can tell a lot about the characteristics, the long-term trend underlying things. So this rotation from uptrend to downtrend was also marked in the momentum characteristic. And if you just simply looked at what range the RSI was in and seeing in the fourth quarter of last year how that had changed from a traditionally bearish phase, a bullish phase, to a traditional bearish phase, even though the market really hadn't sold off yet, you really got a sign that things were different, right? There's sort of a change of character. So fast forward to where we're at through the course of 2022, and you have Alphabet making another new swing low. It's below 2 downward sloping moving averages. The RSI remains in a bearish phase, and the relative strength in an established downtrend. So during the course of the last 24 months, we have seen a clear bullish trend and a clear bearish trend. I think Alphabet is just one of the great examples of that rotation from uptrend phase to downtrend trend phase. Now, why is this an important example to look as we're talking about the top 5 charts, and how can this one individual name be worthy of being one of the top 5 charts of 2022? Because I think the chart of Alphabet represents numerous charts in the equity space that were in one phase in 2021 or another phase in 2022. And you even saw that in 2020 to 2021, right? Look at Zoom or Peloton or Pinterest pins or whatever, any of those, where you had a clear uptrend phase out of the COVID lows in 2021, and they all started to give those gains back. The FANG stocks, sort of the mega cap leadership names, emerged in 2021, took the place of those sort of emerging tech names, and those were the strength in 2021. Look at how these, in a classic cyclical rotation, went from uptrend phase to downtrend phase. So I would say the chart of Alphabet is very similar to things you would see on any of those other FANG names, Meta or Netflix or Microsoft or Apple, right? Different, certainly some subtle or not so subtle differences in terms of what their 2022 has been, but a clear rotation from being upside leadership to, in many ways, being downside leadership. But I think this also tells you a lot about what I think the benefits of technical analysis are and the importance of trend following, right? What trend following does is, what I would argue, there are 3 things you're trying to do at any given point. Number 1, identify trends. Number 2, follow those trends. And number 3, anticipate when those trends are done. And I think the chart of Alphabet over the last 2 years, it shows you how technical analysis can help you answer those questions beautifully. Number 1, identify trends, recognizing the clear uptrend in leadership in 2021. And it's not like you saw that finally in September. Way early on in 2021, if not earlier, you saw the fact that Alphabet was breaking out. You saw that it was making new highs, that it was above 2 upward sloping moving averages, that the relative strength was improving, that the momentum was strong. That was very clear on the left side of the chart. On the right side of the chart, very clear that it's no longer the case, right? And so what happens is, identify the trends. I think we've identified it. Follow those trends. It's recognizing as the RSI remains in a bullish phase, as the relative strength remains strong, as the price keeps making higher highs and higher lows, as it remains above 2 upward sloping moving averages. That shows you how you can follow trends and how strength tends to beget further strength. But that third question is a key one, which is how can you anticipate when the trend is reversing, right? Anticipate a trend reversal. This chart of Alphabet, if you missed it, I would certainly spend some time here at year end dissecting this chart in great deal, which I have done to prepare for this episode. Think about how the picture changed. Think about what signals and what patterns rotated from bullish to bearish. Think about what levels were established and then broken. And just off the top of my head, looking at the things we've talked about, we went from being above 2 upward sloping moving averages to breaking the 50-day, to breaking the 200-day, to the 2 moving averages crossing, to now below 2 downward sloping moving averages. That all happened during a 6-month period, fourth quarter of last year to first quarter of this year. We went from higher highs to lower highs, from higher lows to lower lows. Instead of establishing new higher levels of support, we failed to hold support. Instead of breaking to new highs, we failed to make new highs. Instead of having the price moving higher on stronger momentum, we had bearish momentum divergences. Instead of the RSI being in a bullish range, we rotated to a bearish range. Instead of the relative strength going up, the relative strength is going down. I think this chart right here, if you want to think about risk management and how you can better limit yourself from destructive downside moves and lock in gains if you've had them, imagine that you own Alphabet in May of 2021 and go through this chart and how it rotates from uptrend to downtrend. Think about what signals and patterns were clear as we look back with perfect foresight, and we can see what exactly happened and how it played out. Think about what signals you should have been following to better play this chart of Google, because I think having a good sense of how to play markets like this is not the last time a chart in the technical analysis world will rotate this beautifully from uptrend to downtrend. There will be other rotations from downtrend to uptrend, right? How can you think about the buy version of these charts and think about some of the stocks that are down so much in 2022 and what patterns would you look at for the rotation higher? Again, as a trend following advocate, my goal is to define trends, to follow them, and anticipate when they're done. Dig into this chart to help yourself answer those questions and prepare better for the next boom and bust cycle. This was chart number 4, digging into Alphabet in a clear rotation from bullish phase to bearish phase. This is the 4th of our top 5 charts of 2022. We'll hit the last one on tomorrow's show. But overall, thank you so much for going on this journey. Thank you for watching the final bar in 2022. We have a lot of really cool stuff planned for 2023 and beyond for the final bar. We are excited to come back from the holidays and be back with you. But until then, have a safe and warm and welcoming holiday season. We'll see you in the new year.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.